Welcome back. Let's invite the first corporate on our show. Hitachi Energy is in focus on the back of its Q4 numbers. It's a near 10% revenue growth in Q4. However, margins came under pressure. EBITDA margins at 6% versus 7.2% same time last year. Venu, the managing director and CEO of the India and South Asia business at Hitachi Energy, is now with us on the show. Venu, morning. You're right in the midst of this entire transition to sustainable energy, right? Now it's become not good to have, but pretty much a must-have. In that context, could you give us a sense of, how Hitachi Energy is placed in terms of a revenue growth? It's about a 10% revenue growth in Q4. What is the growth that you're looking at for FY23?
Yeah. Thank you, Rima, first of all, having me in this show. Appreciate very much. As you know, the whole energy transition is quite a big, it's going around in all geographies, including in India. So a lot of renewable penetration and new forms of the load, such as electrical vehicle, all these things adding, new forms of the market for us, whether it's the grid modernization or, grid digitalization, as well as, electrification in the industries in that. The quarter, which is past, that is January to March quarter, has a lot of headwinds in terms of the Omicron wave we have to deal with. Protecting our people was the paramount importance for us. And also the headwinds in terms of the commodity prices high, and also the chip and semiconductor shortages. All those things, we have, I would say, that successfully navigated. And we have grown our orders almost 22% in the quarter. And the revenue has grown, as you rightly said, in 10%. Our operational EBITDA definitely has come under pressure due to these things, but I would say that we have delivered a very strong performance under the most difficult supply chain constraints, etc. in that.
All right. Hi, Mr. Venu. Nigel on this side. Well, sir, technology cost is currently elevated because you're paying ABB also, and also parallelly you're investing in your own systems. Now, when will this duplication end? And also, I want to understand, whenever it ends, what could the savings be on margins? I estimate that will be a bit of a margin booster. Go ahead, sir.
Yeah. So on the technology cost, we are not paying to both. We are paying only to Hitachi Energy. What we are paying is the IS cost. Now, as you know, we came out of ABB. We are under transition of the IT systems under ABB. So we have the TSA exist cost, which will be paid up to middle of next year. And then at the same time, we are also building up our own state-of-the-art SAP system, Ariba. That is what we are building up. So there will be some parallel costs going up for at least in the next 4 quarters or so.
You spoke about having to navigate commodity inflation in Q4. Your margins in Q4 was 6%. Is that the bottom? What is your expectation of a margin performance in the current quarter and the year?
Yeah. We're talking about our margins in the quarter, January to March. Our EBITDA margin is 9.2% in that particular quarter. And we have been talking about, if you recall in your own show, that we have a strategy to bring this margin, EBITDA margin, to double digit in the midterm period over 23 to 25. And we have in the whole year, if you really last year, we have a high single digit margin of EBITDA. And we are well to reach our double digit margin corridors in the near term. So we are having a levers of exports, which we said that 20 to 25% of our revenue comes from the exports. We already higher threshold of our margin in the last year. We also said that service, we will double our revenues in the service, both in the digital as well as in the traditional service. So we are also on the way to reach that over a midterm period of that. So the combination of these levers, so we believe that we would get into a double-digit EBITDA margin in the midterm period.
All right. So an average for the FY23 will be double-digit, Mr. Venu, of margins?
So we are saying that 23 to 25 is the period where we said we will reach the double-digit EBITDA margin.
Okay. All right. Mr. Venu, I understand that Hitachi Energy does not have a non-compete clause with ABB. So are you looking at robotics, automation products for Hitachi Energy's clients?
No, let me talk about Hitachi Energy. So we would, if we really look at our strategies, our technologies, and our engineering capabilities in and around on the power standpoint, whether it is a power generation, transmission, distribution, as well as in the consumption standpoint. And we would like to remain in that. So we have the traditional segments such as transmission, distribution, generation, consumption, but also the new segments, for example, data center, energy storage, and those things are where we are creating our markets and our customers, where we are engaging with our customers over there.
You gave us strategy on improving your margins to double digit. You're looking at higher export growth services. What about the top line revenue growth? What is your expectation and internal target?
Right. So when it comes to the revenue, we have been again consistent with our strategy that we are taking several initiatives like driving our traditional segment as well as the high growth segments, what we call, such as high growth segments like a data center, HVDC, software, etc. All these things would enable us to grow higher than the market. So we also said that if the market is growing X percentage and we grow higher than the market. If you really look at our last year orders have grown whole year 12. If you take it 4 quarters, orders have grown almost 18%. And you know that the market is not grown to that extent. And the revenue will be an offshoot of it. For example, we are a late cycle business, so sometimes once we receive the orders, depending upon what kind of products portfolio, it will take anywhere between 6 months to 12 months for the orders to fructify into the revenue.
Okay, all right, Mr. Venu, very quickly, I wanted to ask you about export potential. Has it changed post, that Ukraine-Russia conflict there, and also the ongoing issues between China as well as the United States? Wanted your assessment of that.
Yeah. So, yeah, absolutely. I don't want to get into the geopolitical things, but we have a very robust export strategy in it. So we have a 3-pronged strategy on the exports. First, some of our products manufactured locally here has a global feeder factories. That's number one. We continue to supply to all customers. And second one is we have allocated markets where we really develop those markets together with our sales force and also the sales force in that particular countries. We continue to develop the markets there. And the third one is we have some product components where we manufacture for our companies around the world, and what we call them as the feeder factories in that. These are the three buckets, and where we will be driving our exports in that. We set our strategy in the beginning of the year, the 20 to 25% strategy in the midterm, where we already reached last year 24% of our revenue as well as our orders comes from the exports in that. So we still have a scope to improve further, and that's where we are adding the new factories, and we are also improving. Recently, we have inaugurated our resin integrated factory at our Baroda factory, which is the first time we are bringing this technology to India.
Thank you, Mr. Venu, for joining in. That's the word coming in from Hitachi Energy. They're looking at industry-leading growth going ahead and double-digit EBITDA margins, which compares with 9.2% that they clocked in the March quarter. Let's take stock of the market technicals now. Mitesh Thakkar of earningswave.com joins in for a technical check as well as a few strategies. Mitesh, morning.